Wealth. Digant, good morning. Thank you for joining us. Let's understand the business. It's an aggregator. It's an aggregator which sells a product which has very high margins in terms of the commission structure, and it's a space which is truly getting disrupted by existing brokers, banks, distributors, and new fintech companies. How do you view Policy Bazar now?
I'll just break down this whole analysis into two parts. Okay, one is the business itself, and second is, the valuations part. Will come to it a little later in the debate. The business, they have built an incredible business. Insurance is an extremely difficult product. It's a complicated product. Nobody really understands what the IRRs are, what the payouts will be, and all such financial things. Nobody really understands. Policy Bazar has tried to simplify those things. They've tried to create an online platform where a lot of these things are easily available, and you are not just dependent on your broker, or you are at the mercy of the large companies. So yes, it's a very innovative platform, so to say, and they're providing a good service. But then we have to understand that when we talk about fintech businesses, and that tech is the future and internet is the future, we have to realize two things: that insurance is a push product, not just in India, but even in China, even in the United States, which are maybe 20 years ahead of India in evolution. So insurance needs some assistance. Like, Nikunj, maybe have you ever taken an insurance policy without maybe, some of your uncle or chacha mama, anyone pursuing you to buy it? This is what India is, that, we really don't have the financial literacy, and it's a push product. And to push a product, the online channel is not itself adequate. So if you look at Policy Bazar itself, they employ more than 6,000 people, right? If it's a fintech company, we do not expect, such a large employer, such a large employee base. Their employee expenses are roughly 500 crores, maybe, slightly more than the insurance premiums that they collect. So I think that, insurance remains a people heavy business. They have introduced a tech platform, but let's not forget it that it will remain a people heavy business. Policy Bazar has themselves stated that they are going to open 200 branches. When you will have 200, when an online company is saying they will need a lot of branches to sell, they are also giving us the same message that insurance cannot be purely sold online. You will need a lot of hand holding, you will need a lot of human assistance, and that itself tells me that the way to profitability is very, very long. See, Nikunj, how do you define a platform business? That, once you achieve a scale, your revenue will grow much faster than your costs. But here, I think the revenue and costs are tied very much with each other, because you have to keep on selling more and more policies each year. And to do that, you will have to spend more and more money, because the insurance commissions also are the highest in the first year, and the second, third, fourth renewal commissions are extremely low. So yeah, that's what is my base assessment, that we should not think of this as a purely online or a fintech company. This company is maybe 75-80% offline, and 20% online, or maybe 70-80% is people business and 20% is tech business. So I would not compare it with an Amazon or a Facebook, or even a Nika or something, where the online part is much bigger. So yeah, that's my initial comments.
But what are the chances that, let's say I'm using the broking business as a parallel? The broking business was dominated by sub-brokers. It was dominated by relationship. It was dominated by, because if you called up a broker, he would give you some sense of advice which would benefit the client. But now the Zerodhas and the Angels and the ICICI Securities of the world have taken it away. What are the chances that an aggregator like Policy Bazar actually would benefit? Because they take the intermediary out, they give you a comparison which no other brokerage would give. They are empowering the buyer with exact rates and exact breakup, which in a sense always has been this hidden aspect of the insurance selling.
Okay, so see, you have to understand that equities was a fairly simple product, that you buy a stock, you pay brokerage on it. You buy a futures and option contract, and you pay some amount of brokerage on it. So I think that, this tech, use the tech really help in disintermediating the brokerage sector. The same happens with mutual funds also. Like, mutual fund is a very simple product that you decide a scheme, you do an SIP, you can increase your allocation, decrease your allocation, remove your allocation, and you just are going to pay them the fund allocation charges or the expense ratio. But see, insurance, the product itself is highly complicated. Policy Bazar is not going to be able to change the product which an LIC is selling, or which a Bajaj Allianz is selling, or which an HDFC Life is selling. The product itself is so complicated that there is a limit to which Policy Bazar can simplify the whole process. So I think that huge boom in insurance sector is maybe 10 years away, because you really have to get down the ticket size to the level of a micro insurance. Like today, 500 rupees of SIP in mutual fund is possible, or just 20,000 in your zeroth account, and you can trade in future and option contract. But the same is not true for insurance. In ULIPs, if you see, if I don't pay more than 1 lakh of premium, I'm paying such high fees that actually I will end up losing a lot over my 10-year journey. So I think Policy Bazar is constrained by the sector itself, that the sector itself has to first simplify. The regulator has to make the regulator and all the players have to make insurance sector more and more simpler. But Nikunj, world over, it's not the case. If you look at China, only 5% of the policies are sold online. If you look at the United States, which is the mecca of this whole online boom, only 13% of the policies are sold online. So I don't think it is anytime near in India that we can expect what happened to the Zerodhas and Upstocks and Angels of the world. That will happen to Policy Bazar, but maybe that's a little away. And till then, we have to live with losses and low profitability. And Nikunj, I think that sooner or later, every company will be subject to the same test. We can say they are new age businesses, but let's not forget that ICICI Securities was also once upon a time a new age business, and now we value it on profits and the cash flows. So the same is going to happen to these companies once the euphoria around them subsides. So I just think that for Policy Bazar to grow more, they'll have to spend more, and profitability is still away. We as India as a country is not there in terms of critical mass that these businesses can have great operating leverage very soon. So yeah, that's what I think, that insurance sector will not repeat what happened in mutual funds or brokerage sector just yet. It's still a little time away.
Interesting analysis there, Digant. Good to have you on the show, and thanks for taking the time and speaking with us about